about with the Christmas season here in full swing.
Yeah, but a little time planning now can help bring big savings in the future. And here are some tips is certified public accountant Crystal Faulkner. Crystal, so good to see you again.
Thank you.
All right, let's start with where we begin. What's the first step?
Well, the very first thing is to know where you stand. So what that means is you need to project your 2016 income. And usually a best way to start is to pull out your prior year, your 2015 return, to take a look at that, to see what happened last year, and then think about any life changes that may have occurred. Marriage, divorce, having a baby, all of those things are going to impact your taxes. So make sure you project your income.
Okay, we have a new president-elect, Donald Trump, and he has talked about changing the tax code. What could that mean for us? What should we expect?
Well, what that really means is this year tax planning is even more important than ever. So instead of just looking at 2016, you really have to consider 2017 and pay attention to some of the rumors that are out there, because one of the big ones that's going to affect many people is the president-elect is talking about reducing rates. And what that means is a permanent tax savings if you can accelerate income into 2016 and or accelerate deductions. So in other words, accelerate your income into 2017. And what that means is by postponing a bonus, if you have that luxury, if you're a freelancer, postpone billing so that you don't collect the income until next year. For most people, the easiest way to control that is to accelerate deductions. And what that does is if it reduces your income, your adjusted gross income, then you may be eligible for other deductions, other credits, such as the education credits, the child tax credits that you wouldn't otherwise be eligible for. One little example is if you can accelerate in 2016 a contribution deduction that you would ordinarily pay early next year, say it's $1,000. You can save, if your tax bracket changes a 10% reduction next year, you can save about $100 or more.
So make that donation this year.
Yeah, we know tax rates are probably not going to get lower.
Okay. And one final thing has to do, the stock market's been rising lately. What should people do with the investments?
Well, take a look at it, know where you stand. If you're in the lower two tax brackets, the 10 or 15% bracket, see if you can take steps to actually minimize that income. Don't pull more income in, because you can actually have a zero tax rate on capital gains if you're in those lower two 10 and 15% brackets. If you've been lucky and have had some gains, see if there's any losses in your portfolio that you can take advantage of to reduce your overall tax bill.
All right, Crystal, thank you so much. Great advice. I'm sure we'll see you after the new year once again.
When we start agonizing again. All right, Crystal, thank you so much.